Hey, Jason, I have a question. What's something clients are always surprised to learn about taxes?
Something that clients are always surprised to learn about taxes is that taxes, tax planning is something that you should be doing proactively year round and not just once a year in April. What do I mean by this? So if you want to get ahead of your taxes, the key is be in communication with your CPA, with your tax professional. Talk to them about your plans, right? Are you thinking of buying a property, selling a property, starting a business, buying a business? Are you thinking about getting married? Are you thinking about getting divorced? Are you thinking about having children? Are you thinking about buying a new permanent residence? All those things can affect your taxes. So if you are ahead of the game and you talk to your accountant and you guys strategize about how you can really maximize your tax savings, then that's something that you guys can really be proactive about. Because think about it. If you go to your accountant at the end of the year in April and you tell them, okay, here is a box of receipts, save me as much money on taxes, by then it's already going to be too late. There's no planning, there's no being proactive anymore. Instead, you're being reactive. So that is why it's important for you to think ahead, right? Here's a real story. A client of mine was thinking about selling their permanent residence. And then before they even put the property on the market, they actually came to me first and they asked me, how much do you think we're going to get taxed if we sell this property right now? So I told them the consequences, right? So tax consequences is you're probably going to have capital gains tax. But if you do this, and this, and you're able to save more money in taxes. For this particular client, one of the biggest game changers for them on their taxes that we were able to save them a lot of money on their taxes was that instead of selling their property, I told them, have you considered about doing a cash out refi? This is because the reason why they wanted to sell their property is to get more cash to buy more properties. So I told them that if you sell your property, you're probably going to get hit by a big capital gains tax because you haven't lived in the property long enough as a primary residence to get a capital gains exclusion. So why don't you just cash out refi? Because the property grew a little bit in equity. So then let's do a cash out refi. Let's get some cash. That money is untaxed because it's considered a loan and not income. And then now you could get that cash and you could keep more of that cash to go and buy more property. So that's good tax planning, is being one step ahead, right? Really planning out your next moves before taking action. Okay, so always talk to your accountant first before you make a big decision like that.
Thank you, Jason. We'll keep all of this in mind. Have a great day.
Another year, another pile, numbers stacked up mile by mile. It's time to sit, reflect, and add. Doing taxes ain't so